Hello, Maverick traders, and welcome out to your daily market roundup. This is Ankit here, and let's begin our new year's with our first roundup as we begin our first trading day of 2025. Happy New Year to all of you, and hope everyone had a good holiday season. Now it's time to get back in the swing of things and see especially how market transition from that holiday environment going into regular trading environment. So as always, we'll be breaking down today's market price action by looking at broader market analysis. We'll take a look at what's happening in the major indices, take a look at the heat map, and then we'll take a look at some possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at our market analysis, let's just jump right into the headlines of the numbers today. And as far as the headline goes, you can see the market continues to be remaining under pressure as we are seeing this losing streak continue. So again, there's a lot of things happening. One of the biggest thing that we saw in the holiday trading, again, we expected or markets were expecting a bit of a Santa Claus rally, which did not happen this year. So, and again, if you look at statistics, as we have this losing month of December, which is likely to lead with the negative month of January. So overall, I think we're just going to continue watching, especially as we decide which direction we want to go for. Now, as we take a look at the numbers today, you can see Dow Jones were down, S&P down, Qs were down, small caps were flat. And then we're seeing a nice little jump in the oil market and the gold market. So the equities continues to be remain under the pressure. So here's a chart for the S&P, and you can see that, last week we talked about where we were here, and it seems like market had made a full recovery, and we probably consolidate. But that was not the case. We saw, these trading days continues to be on the downside. So here we are. We have the support in place. We are below the 20 to 50-day moving average, which is again, at this point, if I have to really take a bet here, I think market likely to break that support area. As we take a look at other areas of the markets, you can see that here we are with the Qs. They are just testing that 50-day moving average. So Qs are looking weak, and then we already knew that the small caps were underperforming. And then here we are with the Dow Jones. You can see that this looks like a perfect bear rally, and we're right back in the support area. So at this point, I think it looks pretty clear where market wants to go. They want to go lower. Now it's just a matter of the time horizon, how long it takes to make that break. Now we discussed this advanced decline ratio and the plus and minus 50 MA. You can see 47 to the upside, to the downside, and 49 to the upside. So it was a pretty split day today. But you can take a look at the market breadth. I mean, this is not a good looking market with 72% below the 50 moving average and 28% above that. So market is definitely weak. And as you can see in this sector heat map analysis today, you can see that there's a lot of red on the board. There's very few little greens, but mostly red. So again, market seems to be going into the new year's with that negative momentum. So as far as the outlook goes, looking at a -2 here, I think we just want to be cautious here as we start to put our new bets for January or going to February. I think market could extend some losses here. So as far as the potential trade goes, again, I have more shorts than longs. The only long, again, this is the one that I like as far as the technical goes, is the EQT Corporation. You can see that this thing, overall ignoring that market little weakness here. And again, if it just goes higher, breaks out above this level at 48, I think it has a little bit more room to run. Now on the sideways play, I got Intuit, and you can see that this thing, I've kind of looked back at the chart. I mean, this is a wide range that we're kind of dealing with going back to all last year as well. So you can see that on 680 on the upper side, and we've got 600 on the bottom side here, kind of around the middle here, getting close to that bottom side. But that's the only one that looks like a nice sideways play. Now let's talk about bearish plays. First one is Qualcomm, seeing some weakness in the technology and semiconductors. So Qualcomm goes first, below the 2050. We got a nice slide, trending lower. So at this point, you just want to see a break below that 150 area. So nice little bear call spread on this one looks great. The second one goes over here is ON semiconductors. You can see that this thing already made that break below that 64 area. We got a nice little breakdown today with nice volume. This one again goes in the top of the list here as well. NXP semiconductors, again, this one also nice little bear rally. We got a trending 20 and 50 moving average down. It looks like a nice little bear cross spread on this one as well. And then we also looked at Adobe in the last few weeks, and you can see that this thing is nicely low basing here. So I have this alert set up on this one. If it breaks below that, do like it on the short side. And then I talk about a couple of plays that I had last week that still looks good. This one is PepsiCo. You can see this thing making a nice low base. Same thing below the moving averages. Just a matter of making that break. And then lastly, we got Coca-Cola. Same thing, going sideways, trending lower. Just a matter of getting that. So overall, I think the market looks a little bit more bearish to me. And again, with that lack of the Santa Claus rally and sort of having the negative month of December, I think market likely to struggle here a little bit. And especially now we have the yields that continue to rise, which is again now putting pressure on the market. So that's the one again we're going to continue focusing on as far as the events goes. Again, we only have one more tomorrow, the ISM manufacturing PMI. And then we go back to the full schedule, starting Monday. I think it seems like a more back to work day, because I know there's a lot of people still on a holiday going into Monday. So continue watching the markets. Again, just time to evaluate and see where markets are going, get into direction right, and then, enter trades based on relative strength of weakness. Thanks for joining here, and we'll see you in the next one. Happy trading.